So how am I feeling about Trump's presidency in all seriousness here? Am I optimistic, not optimistic? So I did a very lengthy post on X today. We're now well over 40,000 subscribers on X. So definitely running up the follower count pretty quickly here on X. I've started taking that more serious really in the past like 6 to 12 months, okay? So here's what I said. I said, I'm so sorry for what I'm about to say. As I know, a lot of people are super optimistic about today and the transfer of power, and I definitely saw it. Like, a lot of people have that sentiment of like, America's back, baby. We're going to get back on the right track. It's only up from here. Like, a lot of optimism. And that happens every time there's a presidency, right? When Biden got in office, there was a lot of optimism, but it was from a different crowd than certainly the crowd that's very optimistic today, right? Same thing when Obama got in office. Same thing Trump got in office 1.0. There's always a lot of excitement, depending upon which side it's coming from, about a new president coming in. It's a new day. It's a new dawn. Like, here we go. America's back. We're going to get back on the right track, right? And there's definitely that feeling out there. So I hate to kind of be, the guy to be a little more cautious on a day like today, right? But I said I'm not nearly as optimistic about Trump 2.0 as I was on Trump 1.0, economic speaking. Here's a thread on what I'm thinking for the next 4 years. 1, corporate taxes. When Trump took over from Obama, he had massive room to bring down corporate taxes. He was able to bring them down from 35% to 21%. Guys, that's 14 extra percentage points in a company's pocket each year. And it's not like it's a one-time thing. It's every year, right? Year after year after year, versus that money going to the government. It's a huge deal. There was a huge boom to the stock market and corporate earnings. Trump does not have that lever to pull this go-round. No. I doubt he's even going to be able to move corporate taxes at all. If he does, maybe he can move it 1% or a couple percent. Like, it's not going to be meaningful at all if he even does move it, which I have doubts if he'll even move it. 2, stock valuations. When Trump took over in 1.0, stock valuations were in a healthy place. Now we're in a stock market that's heavily concentrated. We do know at the top of the market, right? And P's are stretched versus historical norms. Yeah, there's no doubt. I think this is the toughest stock market setup anybody's had since probably Bush came in his first term, right? Because Bush took over, what was that, around 2000-ish? So yeah, I'll say that. Number 3, inflation. This one's very, very important. When Trump took over 1.0, there was no worry about inflation. That was not even like a subject, to be quite frank. Inflation didn't really even start getting talked about until, in any serious manner, until slightly before Rona happened, right? So by that time, we're talking late 2019. Now we have very serious worry of inflation coming back in the back half of 2025 and into 2026. If that happens, things will get very ugly quickly. 4, Fed funds rate. Listen, guys, when Trump took over 1.0, what was the Fed funds rate at that point in time? It was 0.5%. 0.5%. Now it's 4.5%. We're not talking about a small difference. This is a substantial, massive difference. I mean, it's the same as thinking about, imagine, the Fed funds rate's 8.5%. Like, you'd be like, oh my gosh, that's insane, right? Yeah, that's the sort of difference we have between 0.5 and 4.5. If inflation comes back in 6 to 12 months from now, there will be a risk that the Fed could start raising rates again in 2026, and that would be no bueno. How bad would that get if the Fed had to start raising rates again? I can tell you that would get very, very ugly for the stock market, right? We would have quite some drama play out if the Fed, if investors started becoming convinced that the Fed would have to start raising rates. How much are we talking the stock market would drop if that became a serious matter? My opinion is the S&P 500 would drop a minimum of 10%, but that's bare minimum. I mean, 20 to 30% is probably more realistic if people really start to factor in, hey, the Fed's about to go through another hike cycle. We're not just talking about one hike. We're talking about several hikes over a period of time. 10, 20, 30%, fast it would happen. But let's see. That's certainly no guarantee, but it's a serious worry, and it's not a worry we had in Trump 1.0. 5, personal income taxes. In Trump 1.0, there was a lot of room for favorable adjustments to be made to personal income taxes. I don't see any major favorable changes coming to income taxes in Trump 2.0. I would gladly welcome it if Trump has some great new tax plan that, my income taxes are going to go down a bunch in the next few years. I don't see it, though. I don't see it. I think that would be pretty much hopium. I would gladly welcome it. Trust me on that with what I pay in taxes, but I don't think that's happening. So don't get your hopes up about that. 6, real estate. When Trump took over 1.0, mortgage rates were cheap. They were. Like when Trump took over, mortgage rates were in like the 3s, right? And for much of his almost all his entire presidency, mortgage rates were either between the high 2s to like mid 4s, right? His entire presidency, basically. So mortgage rates were cheap and real estate prices were fair. In Trump 2.0, mortgage rates are the highest they've been in 15 plus years, and home prices are sky high when you compare them to incomes. If prices go up more, that will cause a bigger bubble. If prices go down, then what happens? This is a problem, okay? And this is why real estate screws with Trump 2.0 in a substantial way. If real estate prices go up, right, it's going to cause this whole unaffordability crisis to get way worse, right? Let's imagine, real estate prices go up 10, 20% over the next couple of years. If you think real estate's unaffordable now, wait till it goes up another 10, 15, 20%. Then it's going to be even more unaffordable, right? But here's the other problem. If we were to talk about real estate prices going down, that's not going to be good either. And the reason that's not going to be good is because you got to remember who owns like the vast majority of real estate. The same type of people that really spend the vast amount of money into the economy. If those folks see their real estate going down month after month, quarter after quarter, year after year, it's not going to make them feel good. They're not going to want to spend as much money in the economy if you see your home price or your home's price going down and down and down, which then would also mean if you have rentals, you're not going to be able to command as high of rents, which also simultaneously makes you not have as much money, not feel as good. In general, your sentiment is going to be lower, right? And those are the people you're really counting on to spending money in the economy. So in regards to real estate market, the important thing that everybody watching this has to understand is Trump is really set up in a no-win situation this go around when it comes to real estate. It's very important everybody understands that point, okay? 7, commodities. If investors are confident that the economy will be great under Trump, then commodities will pump big in 2025. There's no other way around it. Like if people become very confident in the economy, things are going to be booming, construction's going to be booming, everything's going to be booming, commodities are going to go through a big bull cycle again. It's as simple as that. If people are very worried, scared about the economy, things aren't going to be good, guess what happens? Commodities go down. So if commodities go on a big bull run in 2025, guess what's going to happen? You're going to see major inflation come back in 2026. Everything that is made in this world ends up coming back to commodities at the end of the day, right? And one of several key reasons we had the crazy high inflation in 2022 was because commodities went through one of the most epic bull cycles you've ever seen in history. From basically the second quarter of 2020 to the second quarter of 2022. That commodities bull cycle was unparalleled, unbelievable moves in basically every single commodity out there. So what am I doing with my money? I'll stay heavily invested in stocks that have underlying companies in which they can produce huge profits in any environment, companies that can grow revenue, margins, net income in any environment. I'll hold $5 to $10 million of real estate. I'll hold another 7 figures plus in cash that's in savings accounts, CD accounts, things like that, right? Now, next thing I want to show you that's very important here, right, is here's the thing you got to understand. Even though I'm not as optimistic about Trump 2.0 as I was Trump 1.0, right? That does not mean we're doomed. That does not mean bad things. We're screwed or anything like that, right? Because here's the thing. Let's say we could even get a 10% gain from the S&P 500 over Trump's 4 years, or a 20% gain. Would that be great? No, that would not be great. But guess what? There's still going to be a lot of money to be made. If you said the S&P 500 goes up 20% over the next 4 years, right? Not a good return. However, there's going to be stocks. If the S&P 500 goes up 20%, there's going to be stocks that perform 60% returns, 80% returns, 150% returns, and 200% returns over the next 4 years, which sounds pretty darn good to me. Even if we got a 30 to 40% return, still would not be good over a 4-year span. However, even if the market returned 30 or 40% over this next 4 years, that would still mean a lot of money is to be made, right? Now we can say if there's some major crash under Trump's presidency, let's say market crashes in 26 or 27 or something like that, right? There's going to be a lot of money to be made on the downside. And if you know how to hedge your portfolio properly, you're going to make more money than you ever dreamt of in that environment as well. So regardless of whatever happens here, whether the market returns 10 to 20%, 30 to 40%, or maybe it's just as good as Trump 1.0, 66% return, or even better, 80% return, whatever. Or there's a crash like there was under Bush, right, in his first couple years. Regardless, there's going to be a lot of money to be made here. A lot of money to be made. And so, that's the thing you got to understand. Like, that's why I always stay invested. That's why I always stay looking at deals. What do we got out there? Because you got to understand there's going to be a lot of money to be made over this next few years, right? It might just come from different places than it's come from the last few years, right? There's certain stocks that have really performed tremendous over the last few years. We know that. Sometimes it's not always those same stocks. It's going to be a different bunch, right? That's an important thing to keep in mind. So make sure you're taking investing serious. If you want to access all my best premium courses, there'll be pinned comment down there. You can click on that, fill out a form, see if we can get you access to all those best courses, guys, so you can take your investing serious this year, because I can tell you there's going to be a lot of money to be made, plus get access to 1000X stocks and all that good stuff, okay? Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. The moral of the story is Trump's talked about cutting corporate income taxes from the 21% rate down to 20%, right, which would be an extra percent for all companies to have versus the government having, right? And he's talked about reducing basically the income tax rate for corporations to 15% if the companies make products in the U.S. Now, that's going to be a confusing mess, because what constitutes making a product in the U.S.? What if you get a bunch of the products from outside the U.S., but then you technically put it together, okay? So let's say 99% of the products made in China, but all you got to do is just put this one screw together. I made it in the U.S., right? Or it's made in some other country, and then I put the one screw in. Okay, it was made in the U.S. This is going to be a complicated thing to figure out how that works, or if that even happens, okay? I think cutting the corporate tax rate just at 20% might be a lot easier to pull off that, but that's something to keep in mind, right? Now, also, Trump has talked about a universal 20% tariff on all imported goods to the United States, and increasing the rate to 60% for imported goods from China, right? Also, talked about getting rid of the electrical vehicle credit, those sorts of things. So we're going to have likely if you know Trump, we're going to have some tax policy changes over the next few years, and we're going to have some tariff changes over the next few years, right? Now, the important thing to understand about this tariff situation, this is another thing that's giving some pause to the market, right? Because the market's looking at this and like, dang, is Trump serious? Is he really going to do a 60% tariff on things that are coming from China, right? Because, imagine there's an iPhone made in China and it has a 60% tariff on it. So then, does that iPhone then go from $1,000 to $1,600? Like, this is something you got to consider, right? And so that's something that gives some pause to the market once again, right? And once again, obviously Apple's outsourcing to India a lot of those products. But you could look at something like a stock that I own, Elf Beauty, right? Elf Beauty's had a lot of kind of malaise around the stock over the last number of months because it's worried about tariffs, because a lot of Elf Beauty's products are made in China, right? So, you could say, well, Elf's going to pay the 60% tariff, right? You guys can pay this. Yes, initially, but that's not the way it works. It always ends up coming back to the consumer, which then leads to, guess what? Inflation, right? So when we talk about the inflation that went out of control in 2021 and 2022, the thing you got to understand, the seeds for that were already in prior to Rona. There was already inflation talk prior to Rona. Rona was a thing that supercharged it, right? And that was what put it overboard. But we already had inflationary problems before Rona. It's just that took it crazy, right? You had supply chains disrupted all over the place. Next thing you know, you had the stimulus money. It was a whole mess, right? But we already had that, because basically prior to Rona, you already had companies getting hit with tariffs. Those companies aren't going to take the hit. They're going to pass it along to consumer. That's the way it works. These companies didn't get this strong and this powerful just by chance. They're always going to pass it on to the consumer. So for instance, Elf, right? If Elf suddenly has to have a 60% tariff on products, right? What do you think they're going to do with pricing? They're going to go on their Halo Glow liquid filter. They're going to go from $9 to $15 on that. On this Power Grip Primer, they're going to go from $10 to $16. On this product, they're going to go from $5 to $8. You think e.l.f.'s going to take the hit on that forever? No, of course not. Maybe very initially, but they're going to pass that right along to the consumer, and so isn't every single other company that makes products outside the country. That's what you do, right? And that's what e.l.f. did in the first go-around as well, right? Now, let's say they outsource manufacturing to India, where maybe they face a 20% tariff or something like that instead of 60%, right? You think e.l.f.'s going to take that hit? No, of course not. They're still going to go up on this product from $9 to $12. They're still going to go up on this product from $10 to $12, and this product from $5 to $7. So whichever way you slice it, the consumer will pay that tariff. They will end up paying that tariff in the end. It's the way it works. It's the way it worked first time around in Trump 1.0. It's the way it will work Trump 2.0, man. It's the same thing, right? No. You might think this must hurt e.l.f.'s business model, right? Or you might think initially that this doesn't really help e.l.f., right? They're just offsetting the tariff, right? So they have to face a 20% tariff coming because they're manufacturing the product in India, let's say, for instance, right? Or some other country, Indonesia, wherever, right? Let's say, for instance, you think, oh, they're just offsetting it. No, that's not how this works. They could actually make way more money. Here's why. If you look at e.l.f.'s gross margins, the gross margins of the company is well over 70%, right? So think about this for a moment. If e.l.f. goes from $9 to $15 and from $10 to $16 and $5 to $8, right? The gross margin dollar before, just rough numbers, back of the napkin math, right? Was on this product, gross margin dollar would have been about $7. On this product, it would have been about $7, right? Gross margin dollar on this product would have been about $3.50, something like that, right? Well, here's the gross margin dollar afterward. Now it's up to about $11. Gross margin dollar now about $12. Gross margin dollar after about $5.25. Now you gotta say e.l.f. doesn't even have to go up that much on customers, and their gross margin dollar would still increase actually, right? They don't have to be as dramatic as they are here. And even if they outsource manufacturing and took the 20% hit, they don't actually have to go up 20% on the product to essentially have it offset and actually be incrementally helpful to gross margin dollar. So the gross margin percent could stay the same while gross margin dollar actually grows. That is very important that everybody understands that math there. Because unless you're really into business, you're probably not aware of that. The company could have gross margin percent stay the same and gross margin dollar could grow substantially. And that goes to what? The net margin. And then you're talking about net margins that are far better. So when you looked at corporations certainly got much more profitable under Trump 1.0. It wasn't just the fact that Trump went down on corporate income taxes, corporate taxes for companies, right, from 35 to 21%. That was a huge help. But the other part is things like I just ran you through there. Companies could actually increase their gross margin dollars considerably, which then helps their net margin, which then, guess what, makes a company much more profitable. Something very important. And if the company's got a lot more profit, guess what they can do? Big share buybacks. And if they can do big share buybacks, guess what it helps? The stock price. It helps the earnings per share. And it helps the overall stock market go up, okay? So a lot there. If you need to go back over that one, rewind the video, watch that 3-minute segment, 4-minute segment again. It's very important everybody understands that for any of these companies dealing with, potentially tariffs coming here, okay? Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. e.l.f. I know a lot of people have been wanting me to talk about e.l.f. Well, listen, let me say this first off, right off the bat. Sometimes, I don't have anything to talk about. Like, with e.l.f., right, we're going to talk about their numbers right now, but there just hasn't been a lot to talk about. Like, what am I going to talk about in regards to e.l.f.? Like, all the price action? I like to talk about stocks when analysts are coming out with these upgrades and downgrades and things like that, right? And when earnings are coming out, or like I'm very actively buying a stock very heavy at a particular time, and I think it's a great opportunity. That's when I like to talk about stocks. But when it's a company I've made fortunes on, and there's really no news, it's just price action moving around, like, what am I going to talk about? I'm not a technical trader. I'm not going to break down the technical crap. It's all complete garbage. We know that, right? Technical mumbo jumbo. It's a joke. It's a joke, right? Show me one guy that's ever made consistent money in that. Yeah, never happened, right? Elf on a shelf. It's an ancient stock for me in the public count, up 1,502%. I'd love to see some technical person ever make 1,502%, and they can't. Ancient stock in the public count. So when it comes to Elf, right, here's the deal. 15 straight double beats for this company. 15 straight double beats. That's incredible. No technical analysis is going to show you that, right? Incredible. Nuts. Now, as far as Elf on the shelf, likely beating. Next 2 quarters, revenue 21%, 18%, likely beating as well, right? Maybe this is a one time that, you know, the haters of Elf will get their chance to finally, they finally missed, and they're going to celebrate like crazy. I think it's a hard company to bet against, is it not? I think it's a really, really difficult company to bet against. Maybe you can get lucky and it's that one time they miss. Good luck with that. But the thing we got to understand about Elf right now in the short term is a lot of the focus is really on China and tariffs, right? What's Trump going to do? Is Trump going to put on 25% tariffs on China and these products, or 50% or 70%? We don't know. And so that just leaves like a cloud in the sky right now that we're like, is that cloud bringing us rain or is it not? We don't know. And so that's kind of going to hold Elf back a little bit in the short term, in my opinion, until there's more clarity from what Trump is up to with those China tariffs, right? Because you've got to understand such a significant amount of Elf's products are made in China and then shipped to the United States. And yeah, I mean, there's no doubt, like if big tariffs come on, they're going to have to make changes, right? And do this or do that. We'll see in regards to that whole matter, right?